Hello everyone, I'm Mark Sain and welcome to Sain Investment Solutions. Please take a moment to pause this video and review the following disclaimer. Thank you for that. Welcome to week 3 of the Forex market review. Today we're going to look at one trade which we mentioned about a week or two ago, which worked out really good, and a couple trade setups approaching. Without any ado, let's jump straight to those charts. So the first chart we're going to start on today is the Euro-Aussie. And we mentioned that we had this move down. It would look like it's probably going to come back, retest this 200 EMA on the weekly and looking for another potential move lower. We then dropped down to the daily chart and we could see that it had made it run up all the way up to this daily 200 EMA line and had this big pullback on the candlestick, and we're going to look for an opportunity lower. We then wanted to look at the 4-hour for our divergence, where we have our higher price with our lower AO. That was identified. We then came down, bounced off the 4-hour 200 EMA line and then pushed back higher, dropped down to the 1-hour chart, and we saw the same thing come down, break through the 1-hour 200 EMA, come back and retest it. And then we looked for a selling opportunity. So selling opportunities were roughly around these areas here. You probably were looking at a 50 pip very aggressive stop loss, or something a bit more conservative between 100 and 150 pips. And we wanted to write it down to this daily DSR zone. And because that was about 300 pips, the maximum risk to reward, you always want 1 for 2. So if you risked 150 pips, you've made your 1 for 2 down to there. If you're like me and you're risking more like 100 pips, then you've made your 1 to 3 down to those levels. We had its move down. That looked like wave 3, back for wave 4. We know this is wave 3 because it's the first large AO since this move down. Back to zero line, it's zigzagged back up. It had its minimum of 38.2% Fibonacci retracement, and then it pushed back lower. That also matched up with the fib expansion down to those levels as well, which saw our trade become successful. So that planned out very good, and everything achieved, and you got a minimum of 1 to 2 risk to reward on the Euro-Aussie. Coming up this week, we have the pound USD. We've seen this large move push higher overnight, and it's broken up and it's hitting this daily DSR zone there. So expecting some resistance. It's hit just broken through the 4-hour, so expected to pull back down and touch that, or maybe pull down to this DSR zone here. So what we want to see is our low end price and our higher AO, giving us our AO divergence, meaning the downtrend is likely ended and we're pushing back higher. Drop down to your 1-hour chart. We have our wave 1, down for 2, up for 3. This large AO is the first one with this new direction moving higher. So when that comes back to zero line, we should see it pull back to a minimum of 38.2. So hopefully it will come back to roughly this zone somewhere in there would be nice. And that probably would be matching up the tops of it down to this DSR zone there. So hopefully even in between these DSR zones, so hopefully that's what we're going to be looking for, an opportunity there. And when we see it zigzag down into place, we're going to look at our risk to reward. We always want to try to make a minimum of 1 to 2 risk to reward. So if we took an entry there, we probably want to look at stops somewhere around maybe 100 pips. This first DSR zone, it's about 160, 170. So even 150 pip stop loss we could have, moving it to break even before it gets to these highs. Then we want to shoot for some new highs, and we'd be shooting up to this DSR zone up there. Using our Fibonacci expansion tool, if we took it from the lows to the highs and back down to roughly where we think that low will be, you're going to see that it's about the 100% Fibonacci expansion level, or if you're looking just for the wave 3 movement, we're looking around the fib expansion 127. So definitely bring it to break even before this DSR zone, and then look at trying to go up to these levels up here, making your minimum of 150 to 400, so a minimum of 1 to 2.5 to maybe 1 to 3 risk to reward on the pound USD. We have the Australian Stock Exchange. We can see it's pushed back and made some new highs. We're expecting to pull back to this daily 200 EMA line. On the 4-hour chart, we now have our divergence with our higher high in price and our lower AO. Looks like it could probably bounce off this 400, 200 EMA line on the 4-hour chart. So we're looking for a push back down and then a push back higher. Here to me it looks like this is possibly could be wave 1, up for 2, down for 3, up for 4, down for 5. This being the first large AO, and then the small AO showing divergence. So because of that, I'm going to play it slightly different. I'd like to see the pullback on the entire movement. So from the highs down to the lows, instead of just the wave 3, it looks like it's finished wave 5. We're going to have it pull back, and we want to see it come up to these levels up here. Where do we expect it to go from there? Again, just use your Fibonacci expansion tool. If you can get to these levels here, we'd probably want to be risking, maybe 40 to 50 pips. Definitely could bring it to break even before the lows again. And where will it go? Use our Fibonacci expansion tool from the highs to the lows, back up to roughly where the highs will be. And we don't know that until it actually does it. But again, definitely out before the lows, which will probably be the 4-hour 200 EMA line if it does trigger there beforehand. If not, following it down to this DSR zone there. And we're probably looking at a maximum of 230 pips. So if you had a 50 pip stop loss, you could make a 1 to 4 risk to reward down to those lows there. If you want to be a bit more conservative and go a bit higher, about 80 to 100, you can definitely make a 1 to 2 risk to reward. Also on this chart, we have a pattern setup. So let me just go delete these indicators. And we have on the daily chart or weekly chart, we have a pattern forming. So we have our X to A to B point, and then we have our B to C and C to D. This pullback here, we're expecting the entry to be somewhere around the 88.6% mark. So it's hit the 78.6, almost reached the 88. So you could look at for an entry there. You may want to hit this DSR zone. So you may want to consider wait for a bit of a pullback, but you're probably looking around entries around there with stops of about maybe 100, 150 pips. And you'd want to be riding it down to maybe somewhere down to these levels down here of about 400 pips. So a good 1 to 2 risk to reward. Where do we expect it to go? Use your Fibonacci retracement tool from the A to D point. And the first place around the 38.2% fib, which matches up with this DSR zone. And then the next one is 61.8, which is these lows down here. The Aussie USD, we have a trade set up on the daily chart. Another one, we use our X to A to B point. And then we have our B to C, C to D point. This is a cipher pattern. Where do we expect it to go? From X to C, we expect it to pull back about the 78.6 mark. So probably expecting it somewhere around this mark up here. We want to look at getting in. So you could probably look at putting your stops above those highs around 150 pips. Definitely getting out before those lows of 480 pips. So good 1 to 2.5 risk to reward. Where would we like to put our stops? Again, from the lows to the highs, we're probably looking at the first place of 38.2 Fibonacci retracement and then the 61.8. So definitely no more than 150 pip stop loss for your 1 to 2 risk to reward on the Aussie USD daily time frame. And our final pattern setting up is on the Euro Aussie. Here we have our X to A to B, B to C, C to D. So this is a butterfly pattern. So this is going to go past these highs. So what we want to do is use our Fibonacci tool. And we're going to be looking at roughly a fib expansion of 127. So somewhere around there, if I'm correct. Actually, it's that point there. So about 127 Fibonacci expansion level is where we're looking at entry, putting our stop losses probably somewhere up here, maybe 20, 25 pips, something like that, and riding it down to these lows here. Where do we expect it to go? Use our Fibonacci tool. All of this run here. First place is the 38.2, and the next one is the 61.8. So if we got in an entry around there, and we're looking at get down to those lows there, we're looking around 50 pips. So definitely no more than 25 pip stop loss for 1 for 2 risk to reward down to the 61.8 level. So thank you for that. That was week 3 of the Forex market review. We had that successful Euro Aussie trade, which delivered at least 1 to 2 and 2 times its risk to reward. So if you're risking $100, you would have made $200. The pound USD setup, as well as the Australian Stock Exchange 200 setups coming up, using our AI divergence. And then we've got a couple pattern setups as well. So I hope these trade setups meet your criteria, and remember, only trade them if they do, and you follow your own risk to reward. And here at Sane Investment Solutions, we wish you all the best in your success. Take care. Bye-bye.